Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to wealth building, finance topics, or commodities. So let's dive in there. Let's take a look and see what people are sharing. If you want to follow me at Finance Square Finance, and if you want to join our community, finding-value.com, where I dive deeper into individual companies, individual sectors, and can answer your questions during the weekends. We still have a discount coupon code May Day going on. Uselink, we've got asking for a friend. How do you play the Rhodium trade? Look at Rhodium here, guys. Look at Rhodium. Breakout. Breakout, breakout, breakout. You've got a 3-hump consolidation. 1 hump, 2 hump, 3rd hump. A bottom, which is the dead period, is what I like to call it. And then we've got the breakout. This will also help the investments that we are in that have exposure to platinum group metals, because they sell all 3 metals and they are all bottoming in my opinion. So they look very, very good. Coming on down, we've got the Fed has printed so much money that cars, which used to be depreciating assets, are now appreciating assets. Let that sink in. That is pretty crazy to think about. We've got Wall Street investing guru and best-selling author Larry McDonald of the Bear Trap Report has issued a buy 1/3 position trade alert on next-gen energy. This is a speculative bet on one of the planet's best uranium assets in the ground. Most importantly, the gem of the Western world looking out 5 to 10 years. So we are getting some media attention, I believe. I am not a buyer of next-gen energy, maybe up at this spot here as a new position. I've held it for a very long time, since 2020. So I don't know. It's tough for me to buy into these speculative companies with where this one is positioned. I do think that there are other companies in the space that are very attractive, very low, and most likely have more leverage to the price to the upside, is what I think. Coming down, here's USD, West Texas Intermediate Crude on a Renko chart. And sometimes you get a little bit different information on a Renko. We've got the first hump, the second hump, the third hump, the breakout. Then you've got the consolidation that we are currently in. And I do think this is going to rip to the upside to an unimaginable level. People are not thinking about levels that I think are going to come. And I know I sound crazy, and I sounded crazy in 2021 on the channel. I was calling for $250+ oil per barrel. I think that's low. I think we're going higher than that. And what's going to drive it? Money printing. Money printing and credit expansion is going to drive it. You're also going to see a housing market that explodes to the upside. And I know a lot of people cannot envision that right now. And that's okay. It's okay that I can think by myself and not jump in the herd. The herd is wrong here. And a lot of people that I listen to, they're going to be wrong in my opinion. And I'm rooting that in the demographic, the underbuild, and they're going to lower rates. That's going to drive this thing most likely to the moon whenever that occurs. Gold ventures, this could take many months, even a full year. Not the time to be trying to be cute and trade around positions here. And this is silver in US dollars breaking to the upside, guys. We've got volume behind this. Now is not the time to be trading in and out. Now is the time to find positions. We've got an inverted yield curve, and when the curve uninverts, that's when silver rips. We are right there at the sweet spot. It's right here. What are you going to do about it? That's the question. So this is, we've got a whole bunch of different opportunities. I've talked about those opportunities the past month or so. And I've said this before, don't mess this up. Don't mess it up. You do not get to do a reover or redo here. There's no mulligan on this golf course. Don't mess it up. I messed it up last time when I was trying to do it. Don't mess it up. Freeport LNG flows gained further 0.25 billion cubic feet per day today, evaluating inflows to 1.7 billion cubic feet. If they manage to hold on to the rate with the late cycles, it would be the highest flow at Freeport since before the winter storm damaged the terminal in January. So Freeport LNG feed gas flow versus capacity, and they're really ripping this thing to the upside in terms of the 3-train rate. So we're getting back into a lot more flow out of Freeport, which is going to help natural gas prices. One hump, two hump, third hump consolidation, dead period down here. This is where we purchase. Boom. Platinum set for the biggest deficit in a decade in 2024, says Johnson Matthey. Really? Wouldn't have guessed that. Yes, I would have. I'm a huge platinum bull. Ever since platinum was in a surplus a few years back, I've been buying the crap out of it. And now the deficits are going to occur because they're going to substitute too much towards platinum away from palladium. They won't get this balance perfectly right. And when they run these car lots, they run them and they usually last for 5 to 7 years. So a lot of manufacturers switch to platinum. They're going to run it for 5 or 7 years, and that's going to be your bull market. EXK update, nice pump today, nearing its first target coupled with this weekly 150 MA. Yep, and we got it down here on the website, very close to that ultimate bottom. Rhodium is a key component of platinum group metals. It's down 75% from its 2021 high. But look at the base breakout. PGMs are basing and heading higher. ICE cars aren't dead, and hybrid hydrogen need more platinum group metals. Meanwhile, the miners trade for dirt cheap. This is your first hump, your second hump, and then your third hump is this guy coming down. So it's 1, 2, 3. Your dead period's here, and then we are working our way on up. This is your lead-in pattern here, like we saw in SM Energy at the bottom. So this cycle, we went through the full cycle. This is the double top, the top here, double top, much where I think S&P and NASDAQ could be. We come on down. This is the first kind of cycle. So this here is your bottom of your first wave lower. You come on up. This is your top. You got a little topping pattern there, and then you head on lower here. So this is the cycle. If you were to look at Elliott wave, it basically is this entire pattern. Looks nice. GDX, we're looking for a weekly breakout here, breakout watch, and this could be, we actually did just break it here, I think today, depending on if you use the closing price versus the daily price. So it really depends on how you map this out. I should say the monthly price, sorry. So that's GDX weekly there. Man, I'm getting all sorts of messed up there. Scrolling down, wow, more signs of a bottom in gold miners. So Stansberry is officially shutting down their gold stock analyst newsletter. In other words, there's zero investor appetite for gold stocks. Meanwhile, gold prices continue to make all-time highs. Gold miners will print cash at these prices, but nobody cares. That is a sign of a bottom. Most definitely. Lower 48 natural gas production remains weak due to pipeline maintenance. And here it is, continuing to head lower for 2024. Here's Palladium Renko chart that Casper has. Buying Palladium here makes so much sense. And what he did is he took the top trend line, hit, and then projected it lower and put it to the support level. So we're getting support here. Looks really good for Palladium. Sorry, guys. Stanley Druckenmiller on CNBC this week. Copper is a pretty simple story. It takes about 12 years from greenfield to produce EVs, the grid, data centers. And believe it or not, munitions, like ammunitions. These missiles all have, and the world is getting hot. We just think the supply demand situation is incredible. I agree, it is. Precious metals miners are breaking out again. The bull has resumed and the move of a lifetime has started. Move of a lifetime. And we bought at the very lows heavily at the surface. So did we. Siljay breaking on out. Looking fantastic. And here's a gap that was never filled, guys. Are we going to come back and retest that breakaway gap? North Star, silver, if we cross the line, what happens? What do you mean if we cross the line? Okay, silver, rapid energy release probable if we close a week above the red line. So here's major horizontal resistance. You can see that resistance on the left-hand side over here. And then we've got a couple more resistance areas here. We've got that kind of Batman-looking top that we came back down. We've consolidated here, and now we're going to release the energy. So the three potential targets that he has on the right-hand side there, we've got 34-ish, 42, 43-ish, and up around the 50-ish dollar mark is those three targets that he has. What is the best deal in uranium stocks at the moment? I know my take on this. Let me hear. I think that the uranium exploration companies are being overlooked, and I think there's a lot of good opportunities there, in my opinion. So that's probably where I would be looking. I think the major Cameco, that thing's already ripping to the upside, guys. And a lot of the developers are starting to move with speed. So I'm already in all those, and I'm looking at the juniors, and I'll pick some off, not with a ton of money, but I'll pick some off down there at very cheap prices. Tavi says, rather than another short-term spike, silver has been establishing itself at prices we experienced during the silver squeeze of 21, and the pandemic-related surge, I'll bet in a much greater sustainable manner this time around. Investors appear to have a broader opportunity to buy the metal, especially in light of the ongoing breakout in gold prices and the historical high levels of the ratio. This is one of the most significant supply-demand mismatches I've seen for a monetary metal with inflationary attributes, particularly as it becomes increasingly essential for the green revolution. The upgrading of electrical grids and the extensive modernization of industrial capabilities globally. Pandemic surge, silver squeeze, and we're about to rip through all of that, guys. Silver is in such a good situation here. Really is. China, April iron ore imports are 102 tons, another 100 plus month, up 7.2% year to date. They are continuing to stockpile iron ore. Grady, we've got the Dow to gold ratio now has a lower low. This confirms the chart breakdown is in progress. So gold is now set to outperform the general stock market. Very important chart for the next macro trend. Institutions time to wake up, so it begins. So here's the breakdown, the backtest and lower low of textbook crash. So we're going to see, in his opinion, gold start to outperform Dow Jones. And when that occurs, last time that occurred, we had a peak and we broke down in about '02. Go look at all the commodity charts in 2002. That's when they started to take off. This is a very, very, very big deal. Because as gold outperforms stocks, you're going to start to rotate money. Money's going to rotate differently. This is a big deal in my opinion. We've got break wave. China imports are up 7.2%. Coal is up 13.1%. Oil is up 2%. China steel exports are up 27%. It can't get much better for commodity shipping. The big bull market's here, guys. Here's gold. This very simple chart will play out. Doubting this will be the biggest mistake of your life. So let's dive a little bit into this chart here. Let me make sure it's all in visible view here. Okay, this is a chart of gold. It's a 53-year chart. The three gold bull moves for the present monetary system. In a resumed bull market, there's always a next resistance. until there is not. So first gold bull market phase during the Nixon gold window when it was closed. We've got the red parabola here. So this red parabola line fits perfectly, and the time frame makes complete sense for a move like this. And what he's got is a huge move in gold for the third and final bull phase in gold, priced in dollars. So really, what this is what's occurring. It's not gold that is changing; it's the dollar that is getting absolutely blown out. That is what's occurring, and it's going to impact the entire commodity sector. And money's going to rotate differently as gold rips it and outperforms the stock market and the bond market. That money is going to seek shelter for purchasing power. So bonds are already screwed. You're going to see money start to rotate there. I think we're going to get interest rates to go up potentially at some point too. It's possible. They might go down first, and then we rip, and they go into another inflationary, like, huge leg higher. Has that already started? It might have. It might have already started. Gold generally leads it, and that's why we're breaking out in gold. So it's the dollar that's going to get hit. And I don't think people understand that. When I say oil's going $350, $500, $600 a barrel, people think, how are people going to afford that? What I'm telling you is they're not going to be able to afford anything because the dollar's going to get hit. And we, as Americans, are going to lose our purchasing power. So you're kind of in this trade not to make money, it's to preserve purchasing power and to not get killed. And that's where everyone's going to run into it because they're going to figure out, like, oh crap, I need to preserve my purchasing power, and they're going to run towards gold and commodities and maybe even real estate. Lock in those rates. After a brief pause, freight costs started to rise once again. The Shanghai indicator typically precedes the global container index, which I suspect it will also experience an uptick. Indeed, this development is poised to exacerbate inflationary pressures worldwide, particularly if the projected second wave scenario materializes. And I think we've got the first wave up. We've pulled back, and we'll see if we get another big old move in inflation. This one here is the freight costs of Shanghai, which coincides with inflation. Now, this is a huge chart here, guys. I saw this and I fell out of my chair. It says, I don't think people have any clue how high miners, gold and silver miners, are going when this baby breaks. This is a 44-year breakout. Gold stocks historically track gold versus CPI somewhat closely. The 1970s move was a big, big move. It went from 70 to 80, and it was a huge move because it broke out of this downtrend line that we had that was created from 1935 all the way to the early 70s, and we broke out. And this is gold in inflation adjusted. It was a money rotation from stocks and bonds into gold. That's how this moves. It's money that's already in the system, and it outperforms the inflation because of the conditions that we're in. And then people want to preserve their purchasing power, so they move it into gold from bonds and stocks and other asset classes. Those are at record highs in terms of their valuations. This is going to rotate over, and the chart and the way that the herd is basically lining this thing up, we've got a lead-in pattern, and this is the largest cup and handle I've ever seen here. And then we've got another cup and handle on top of it. We've got a dream within a dream within a dream, so to speak. If we can break out to the upside here, the gold and silver mining companies could do crazy things. And that's where your diversification comes into play here. Oil did really well in this inflationary period, and so did precious metals and the miners. I think that same scenario, I think energy and precious metals and the miners are all going to do well here. It's the same setup as what we've had in the 1970s almost. If we break this, guys, oh my gosh, this is entirely bullish. Now, here's another thing to think about, guys. We've got this chart here of gold versus CPI. What is silver doing? Silver's got that 50-year chart pattern too, which is a big cup and handle, just like we've got here. Silver's going to rip. I mean, it's going to rip. And I'm sure platinum and the group metals, platinum group metals are all going to rip too. So this is like once in a lifetime opportunity here, guys. It really is. Uranium, in Scott's opinion, it says, my thoughts on market cap versus next gen says both win. Cap buys uranium stocks with more torque. Must be a company or something. Bids up stocks. Next gen has uranium, which is far better than cash. We win. Fact that more uranium miners are buying uranium should cause a bit of a panic eventually anyway. We've got Kevin here. He says, at some point soon, I expect we will find that one of these foreign precious metal ETFs has trouble sourcing physical material. So contracts to acquire it on Western exchanges, either directly or indirectly, and then clears out the entire exchange inventory. Buy gold and silver. The squeeze will be on. We're getting close to dumping the inventories, guys. It's coming. We've got Uranium Cameco. I'm leaning towards glory. How about you? We're right there at resistance, ready to break. And I'm leaning towards glory for sure, especially with the breakout of gold and silver breaking out. I mean, this is all aligning, guys. This is the third leg. They all break out. Generally, the dollar drops here. The dollar drops, rates come back down, and then we get a commodity surge. Very excited for all of this to occur here. Very, very excited. And that's where I'm going to end it, guys. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website. May Day is our coupon code. And we've got a 7 a.m. question and answer session coming up on Saturday. I'll see you guys there. Catch you later. This is Finding Value.